This is the easiest Forex trading strategy to make $1,000 a day. And in this video, not only I'm gonna show you the exact setup that you need to use, but I'm also gonna show you how to make that amount of money with less than $1,000 as your starting capital. If all of that sound interesting, keep watching, and now let's start with the video. So I'm gonna use TradingView to show you how to mark the setup and how to find the trigger to open the position, but of course this applies to any other trading platform. The first thing that we need to do is change our time zone. In fact, we need to select the New York time zone. After that, you need to go on the 4-hour time frame and you need to add the exponential moving average to your chart. So I'm gonna do it right now. So this is the moving average exponential. Once it is added to your chart, you need to go on the settings and you need to make sure that the length is set to 9 and the source is set to close. So at this point, we are ready to find our setup. So the first thing that we need to do is find the first candle of the day. In this case, it is this one, because as you can see, the previous candle was on the 21 of September, and this is the next candle, which is on the 22 of September, and it is also the first candle of the day. Now at this point, as you can see, since this candle was above the exponential moving average, this means that we're gonna look for buying opportunity, so we're gonna go long. For this reason, we're gonna mark the top of the candle, okay, so the very top of the wick. At this point, we need to go on the 5 minutes time frame, because this is where we're gonna execute the trade. Now, before executing the trade, another suggestion that I can give you is to mark the beginning and the end of your trading period. In fact, this setup is only valid in the same day of the 4-hour candle. So for this reason, we're gonna mark the beginning of our trading period, which is here, and then we're gonna find the midnight and mark the end of our trading period. In this case, it is here. So basically, we can only take trades that are between these two lines. At this point, as I was telling you before, since this is a buying opportunity because the 4-hour candle closed above the moving average, what we need to do is look for the first candle that closed above the top of the 4-hour candle. And in this case, it is this candle, because as you can see, it is the first candle that closed above this line. This is our trigger to enter a long trade. So in this case, we are gonna enter a position here. Now, our stop loss need to be placed below the most recent level. So in this case, we can put it here if you have a high risk tolerance. You can put it here if you have a medium risk tolerance, or if you want, you can even put it here if you have a low risk tolerance, because of course, the bigger your stop loss, the harder is gonna be to be hit. But at the same time, you also need to consider that we are always gonna go for a 1-to-1 risk to reward ratio. And so the more big is your stop loss, the bigger is also gonna be your take profit. But in this case, as you can see, even if we went with the lowest risk possible, as you can see, the trade will still end up being profitable. And same thing, of course, if we went with the lower or even the lowest risk tolerance. And as you can see, this is the setup. Not only that, there might be occasion, like in this case, where there are multiple opportunities to take this setup. In fact, later on, as you can see, we have another opportunity where after the price went below our line, then we had another candle that closed above it. And so this would have been another trading opportunity. More specifically, we will have entered a buy trade here, for example. We will have put our stop loss below this level, and then we will have gone for a 1-to-1 risk to reward ratio. And as you can see, shortly after, our take profit would have been hit. Okay, and then there was no other trading opportunity. Now let me go to another pair. In this case, we are looking at USD CAD, and let me show you how this setup also apply on this specific pair. So we're gonna do the same exact thing. We are on the 4-hour time frame. We need to select the first candle of the day. In this case, it is this one, because as you can see, the previous candle was on the 21, and the next candle, which is this one, is on the 22. It closed above the exponential moving average, so we're looking for long trades by opportunity. So we're gonna mark our level. Okay, it is marked. Then we move to the 5 minutes time frame. At this point we need to mark our trading window, so we're gonna trade till here because this is midnight, as you can see. Now, since we were looking for buying opportunities, we need to wait for price to close above this line. This is the opportunity, so we're gonna enter a buy trade here. We're gonna put our stop loss below this level or even below this level, but let's say that we decide to put it below this level. We're gonna go for a 1-to-1 risk to reward ratio, and look what happened. Our stop loss was hit. In fact, I'm gonna be honest with you, this strategy, like any other strategy in the world, doesn't have a 100% win rate. In fact, there are gonna be some occasions where we're gonna actually lose a trade, like it happened right now. But look what happened. Shortly after, we had another occasion where we have a candle that closed above this level, so we're gonna enter another buy position. We're gonna place our stop loss below this level because, you know, we want to be extra cautious since we lost the previous trade. We're gonna go for a 1-to-1 risk to reward ratio, and as you can see, shortly after, our take profit was hit. And so even if we lost the first trade, the second one was profitable and we basically closed at break even. Now let's look at another pair. In this case, we're looking at Euro CAD. Same thing, we are on the 4-hour time frame. We select the first candle of the new day, which is this one. Since it closed above the exponential moving average, we're still looking for buying opportunity, so we're gonna place our level here. Then we go on the 5-minute chart. We draw our trading window, so it goes from here, it goes from this level till midnight, which is exactly here. And then, since we were looking for buying opportunity, the first time a candle close above the level, we're gonna open a trade. So this is the first candle that closed above the level, so we're gonna go for a long here. We can put our stop loss here because this is the most recent level, and then if we go for a 1-to-1 risk to reward, as you can see, our take profit was it. Now again, if you want to be extra cautious and maybe you say, you know what, let me put my stop loss below this level so I have more room for errors and also more room for the trade to breathe, also in this case, as you can see, it will take a bit more time, but your take profit would have been hit. And this was the only trading opportunity for the entire day on this pair. Now let's look at another pair. In this case, we're looking at Euro AUD. Same exact thing. We are on the 4-hour time frame. We need to select the first candle of the new day, which is in this case is this one. It closed above the exponential moving average, so again we're looking for long opportunities. We mark our level, which is here. Let's go on the 5 minutes time frame. Let's mark our trading window. So the window start here and then it finish at midnight, so it means that it finish exactly here. And now let's wait for a candle to close above our level. So as you can see, this is the first candle that closed above that level, so it means that we're gonna enter our trade here. Let's put our stop loss below this level, and then if we go for a 1-to-1, as you can see, our take profit will have been hit. Also in this case, if you want to be extra cautious and you decide to put your stop loss here, and as a result your take profit need to be wider, it's gonna take a bit more time, but as you can see, your stop loss eventually is gonna get hit. Let's look at another pair. In this case, we have USD JPY, same exact thing. We go on the 4-hour time frame. We look for the first candle of the new day, which in this case is this one. In this case, it closed below the exponential moving average, so we're looking for short opportunities, and for this reason we're gonna mark this level down here. Then we move to the 4 minutes time frame. We need to draw our trading window, which in this case is start here and then as always it finish at midnight of the same day. And now we are looking for short opportunity. Now, as you can see, this is the first candle that closed below our level, so this is our trigger to enter the trade. So let's say that we enter here. At this point, our stop loss is gonna be placed here above these candles, and since we are looking for a 1-to-1 risk to reward ratio, of course also our take profit gonna need to be adjusted. And as you can see in this case, if we start moving on, this take profit still hasn't been hit, but we are deep in profit. And in this specific case, for example, you might decide to move your stop loss at break even, or maybe even move it slightly in profit, so that in the worst case scenario you're still gonna make money, or maybe close at break even. Now let's look for our last pair. In this case we have USD Swiss franc. First of all, let's go on the 4-hour time frame. Again, we need to select the first candle of the new day. In this case is this one. Since it closed below the exponential moving average, we're gonna look for a short trade. So we're gonna need to mark this level. Then we move to the 5 minutes time frame. Let's mark our trading window. So in this case it start here and then it finish at midnight in this case. And so at this point, since this is a short trade, we need to wait for a candle to close below the level. So this is our trigger candle. We're gonna open a short position, stop loss above this level. We look for a 1-to-1 risk to reward ratio, so we look for this, and as you can see, we just need to wait a bit of time, and then ultimately our take profit is gonna get it. So as you have seen, this strategy is really easy. I show you that it can be applied to multiple forex pair. Of course, I'm not gonna test on every single forex pair, but once you understand how to use it, you can test it yourself. And the main reason why this strategy works is because it takes advantage of the definition of a trend. In fact, if you think about it, if we are, let's say, on an uptrend, we expect the price to create higher low and higher high. And so this means that once the previous high has been broken, we can expect a new high to be created. And that's why once the first candle closes above the high of the previous 4-hour candle, this is our trigger to enter, because we expect price to create a new high. And that's why we enter on a long trade. Same thing when price is going down. Since we are in a downtrend, we expect price to create lower high and lower low. And so once the previous low is broken, we enter a short trade, because we anticipate price to keep going down and create a lower low. And that's the reason why we use the exponential moving average, because that moving average is gonna basically tell us if we are currently on an uptrend or a downtrend, and what is the highest probability trade that we should take. So as you have seen, this strategy is really easy. It's completely beginner friendly, and once you understand how to use it, it's gonna be really easy to implement. So now that I explained you the strategy, let me tell you how you can make $1,000 a day having a starting capital of less than $1,000. Well, the answer is simple, and it is by leveraging a prop firm. More specifically, currently, in my opinion, the best prop firm on the market is Ola Prime, for 3 main reasons. Reason number 1 is because Ola Prime deliver all its payout in 1 hour. In fact, thanks to a 10-point solid payout system that include various aspects, like for example robust policies, risk monitoring, daily reconciliation, swift execution, they always guaranteed that all the payouts are processed in 1 hour, and you are always gonna get paid in under 60 minutes every single time. And if you decide to get paid using cryptocurrencies, the payout speed is gonna increase even more. Reason number 2 is because they are the most transparent prop firm in the entire industry. In fact, in case you don't know, since Forex is not centralized, every single prop firm can have its own quote, and as a result, sometimes price can be manipulated to make you lose more than what you should, or maybe to even make you fail a challenge where you shouldn't. Where Ola Prime release a transparency report that, as you can see here, that basically compare the pricing that you see on Ola Prime with the pricing that you see on Dukascopy and on 2 more brokers. And as you can see, at the most there was a difference of 0.01% between the price on Ola Prime and the price on these 3 other brokers. And of course this is a huge positive, because it means that the price that you get on Ola Prime and the actual real prices that are on the market. And as a result, you don't risk losing trades or having your account breached due to price manipulation. The third reason why I think that Ola Prime is currently the best proffer on the market is because they give you the opportunity to book one-on-one session with trading coaches completely for free. And if you are familiar with trading mentorship, you know that this type of session can cost hundreds of dollars an hour. And Ola Prime give you the opportunity to have them completely for free. And as you can see, there are multiple coaches that you can pick from. Some of them are specialized in Forex trading, while others, like for example Lara and Stanislava, are instead specialized in trading psychology. So in my opinion, if you decide to trade using Ola Prime, you should definitely take advantage of this incredible opportunity. Now, going back to the challenges and how to make $1,000 a day with a starting capital of less than $1,000, my suggestion is to purchase a Prime challenge with Ola Prime, simply because this challenge is designed for swing traders, and as a result, not only it allows you to hold trades overnight, but it also allows you to trade the news and hold trades over the weekend. And as I showed you before, there is gonna be some occasion where you need to hold a trade overnight, and this specific challenge allows you to do it. Now, if we scroll down to the characteristic of the challenge, my suggestion is to go with a $100,000 challenge, and the reason is simply because with this starting capital, if you just risk 1% of your account balance every single trade, which equals to $1,000, with a risk rewards of 1 to 1, this means that every time you win a trade, you're gonna profit $1,000. And as you can see, the price for a one-step challenge of a size of $100,000 is $649. So it's less than $1,000. And if you decide to go with a two-step Prime challenge, in this case the price is even lower. In fact, it is only $599. But there is more. In fact, if you decide to purchase one of these challenges, once you get at the checkout page, if you use the discount code STKTRD, like you see right now on the screen, and then click on apply, you are always going to receive a 10% discount on all your challenges. So there you have it. This is the easiest Forex trading strategy to make $1,000 a day, even if you have a starting capital of less than $1,000. If you enjoyed this video, please leave it a like, and until next time, happy trades!